Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a very special guest for you today. She is an industry powerhouse, a thought leader, an expert in origination and production operations, a technology evangelist. Please help me welcome to the show, Keri Rogers, Senior Vice President, Strategic Planning at Lennar Mortgage. Keri, welcome to the show.
Thank you, Michael. I'm happy to be here.
Well, it is great to have you. You have a wealth of knowledge and expertise. For our listeners, though, who might not know you, tell me a little bit about your background. How did you get into the mortgage industry, technology? Give us a little background from that perspective.
Absolutely. I would love to. I think I'm very lucky in my journey in this industry because I was born into it. My mother has been in the industry since she was 15 years old. And as most of us, we never grew up saying, I want to be in the mortgage business, right? We just somehow find ourselves here. And of course, it's exactly what happened to me. And, when I started, I was like, oh, this is actually kind of neat. And I enjoyed working with customers and learning about the process. And, a few years in, my mother's company was purchased by a company by the name of First Mortgage Network, which became mortgage.com. And we worked really closely together to build out their whole retail division. And they had their own proprietary loan origination system, which was really interesting and exciting back in the 90s. So I had great opportunities there. I got to work with people like Garth Graham, Tom Moreno, and others. And we cultivated software that was ahead of its time. And I was brought into the technical side because I was young and I was technically adept and I knew the mortgage industry and they needed mortgage people who could learn the tech side. So that's what I did. And it was truly just the best opportunity. So I was there for many years. And throughout my journey after that, I went from working in production. I was at Chase for many years as a wholesale account executive. I worked at Fiserv as a business consultant. I went back and forth between production and operations and technology and kept, my knowledge really current from all aspects of the industry. And back in, I want to say, mid 2000s to 2014 time, I just implemented Encompass working for a retail mortgage lender. And I fell in love with technology again. And I said, I just want to go back and just focus on technology. So I went to ICE and I worked there for 6 years. And I was the senior implementation consultant working on the enterprise level with their larger customers. And I really just got to experience, great innovation, working with many people who have incredible insight into how we can do things better in this industry. So here I am today.
What a wonderful background. And I love how you say, none of us woke up and said, boy, I can't wait to be in mortgage. But
we did not.
In it, you really don't leave. I love the fact that you have both backgrounds of the production and of the tech, because I think that's really where you can then gain some efficiencies, that knowledge. So let's talk about current market conditions. Rates are fluctuating. Lenders are looking to do cost reductions. The MBA study came out and the cost to originate was almost $11,000. What can lenders do? What are some of the areas they can focus on to start containing some of those costs, but still streamline their processes?
Yeah, so I think that really is the focus right now for everyone. And it's a great question. I spoke at the MBA recently, and this is one of our topics that we spent the most time on, which is, there's so much technology available and there's so many solutions and there's so many different ways in which vendors attack a problem, right? And sometimes that solution fits right into your business model and it makes perfect sense to implement it just as it is. And then someone may attack it a different way and it just doesn't work for your business. So I would say the best thing to do first is to make sure you're using the technology that really aligns with your business. You have the same product vision with the vendor that you're working with, where you want it to go, and you don't have any, significant customization that you have to do to make it fit into your process, because that's where things get expensive and they get complicated and there's a lot of maintenance. There's, you struggle with adoption, you struggle with just making the value, the return on investment relevant, because the whole purpose of these solutions are to make things better and to make, and to lower the cost and to be able to reduce human workforces, right? By automating certain things. And you really want your humans focusing on critical thinking tasks, not checking buttons and checking things that should be automated, but it don't, only works 60% of the time. So you have to do it the other 40 and you end up checking everything. So it's really key just to focus on what you have, make sure it aligns with your strategy of where you're going at in your industry, and to use it as it's designed. Read those release notes, understand the features that are involved in that product, and use them, because so many lenders out there, banks, credit unions, everybody, you get complacent with what you implemented when you implemented it, and you don't continue to, cultivate it and just find additional value out of it.
Well, and I think you make a great point of there's so many aspects of that, of user adoption, of really understanding what you use. I did a talk not too long ago about every one of us has a cell phone, but we probably only use about 40% of the capabilities of what that phone can do. There's 100%. So many things that people don't even, and if that's a device that we use and we look at hundreds of times a day, what happens with some of this other mortgage technology that we're using a handful of times throughout the day or something? So let's talk a little bit about digital workforce solutions, right? You've talked about lenders are trying to contain cost in today's market. They're trying to streamline operations. How can digital workforce solutions, implementing bots and machine learning, how can that help lenders contain costs now in a challenging market, but also when the market turns, then they don't have to throw more resources and more bodies at it?
Right. So, I feel like the best and easiest focus for solutioning right now, when you're talking about cost efficiency and long-term strategy, is using bots. And so many of these processes with bots, with RPA, have been perfected because lenders like myself, like Lennar Mortgage, not just me, obviously, and other lenders who have adopted bots have really focused on the items that are easier tasks, that are super repeatable, very predictable, right? It's not too complicated to implement, but you've saved somebody 10 minutes a day or 5 minutes per loan that they touch. And those bots, once you plug them in and they're just humming and they're going, all you have to do is make sure they're up and running. It's just like your humans. You want them to show up to work every day, right? They got to do their job. They need to be efficient. They need to make sure that they are just performing as you would a human would perform. And that lasts forever because we always have to deliver appraisals to customers. We always have to deliver disclosures to customers. That's not going to change whether you're slow or you're busy. You want that worker who's going to show up every day and do it, and you don't have to check on them. And that's what bots give us. So I feel like right now, the easiest thing to do is to work with a vendor. Like we work with Silverwork. They have great solutions around just, turn this on. We already know how it works in Encompass or whatever your LOS is. And it just works because we all have to do it the same way. That's where there's pickup right now. When you get into the more complicated solutions, again, if it aligns with your business, it might be a huge win. My best advice is to take the time to understand the strategy of how a solution was designed. It's specifically, there's a lot of underwriting automation available right now. Many of these solutions are looking really promising, but it's really interesting because they take unique approaches on how they solution. Some are focused on OCR, extracting data, comparing data, and data quality, right? Which is great for certain large volume lenders and things like that, things where you can't make mistakes there. Others are focused on condition automation, right? Making sure nothing gets missed, quality and workflow improvements to hopefully cut down on the time it takes underwriters to navigate a loan in a system. So it's interesting because you can't use all of them, but you have to decide which one is going to give me the best lift for my organization. And there's not a right answer. You really have to look at each of them individually because it's, I found it pretty fascinating how everybody's taken a different approach to, solving underwriting efficiency in general. It's really interesting.
Well, exactly. And you talk about bots, you talk about finding the right fit with a vendor. You mentioned Silverworks Solutions. I think one of the unique things that my understanding is that their bots really kind of take on a human persona.
They really do.
So
Ours have names.
tell me a little bit about that, because I'm fascinated about that, because I think some people struggle with, well, it's a bot or it's an RPA and they think it only does a couple of tasks, but
Right.
really go into this whole human persona aspect of it.
I think that's one of the reasons we gave ours a name, because we don't refer to it as the bot. We refer to it by their name. So we went after the Jetsons. So we have Elroy and we have Rosie and we have Astro. So we refer to them by name. So Astro does the heavy lifting up front with production and pre-quals and a lot of custom type of RPA automation. What he also does, which is, again, amazing, is he generates and delivers all of our initial disclosures and has completely overhauled how our compliance team works and uses their resources, and they only focus their energy on the problems and the exceptions. Everything else just hums along because Astro shows up to work every day and he does his job, and we just check on him every once in a while and make sure he's okay. As long as he's okay, he's out there chugging away, sending out disclosures. Elroy, he works at closing. Elroy, our closers go in, they do their work, they generate, they make sure they're balanced, they're all good to go. They check a box. Do they want a full package, or do they want a package without a CD or just a CD only? They get out of the loan. Elroy hops in and does all the heavy lifting around doc generation and doc delivery for us. So these are, things that we found just saved so much time and are just time wasters for really highly skilled, talented people to sit there staring at a screen. Leveraging some of Silverworks, just automation related to disclosure delivery, flood appraisal, HOI, just so many easy lifts that you can get on a process that's already been proven by people like us. We've been doing it for a while. I mean, you really can plug and play, which is, I think that's exciting for people right now. If you can eliminate 4 people or reallocate those people and teach them how to be better processors or underwriters, that's a huge win.
That is a huge win in today's market. And then, like we talked about earlier, when the market changes, and you mentioned, Encompass, and you had worked with ICE for a while, Jonathan Kors, their former CEO, always used to say, we have a huge propensity in the mortgage industry for using human spackle, right? Yes. Volumes are really low. Let's throw a bunch of people at it. Volumes are rising and market conditions are a little tough. Let's cut a lot of people. And I think when you can use solutions like the bots that have a human persona, then when the market conditions change, you guys can produce just as much volume or more volume and not have to go on these crazy hiring, firing sprees. I think it's a much more sustainable model and a more profitable model.
Completely agree. It's much easier to add another bot server on than it is to go hire and recruit talent, right? You know what you're getting with your bots. You know how they're going to perform.
Absolutely.
I mean, it takes the risk out of it in a way, right? I mean, at the end of the day, technology in general, we are so reliant upon it within our industry, every industry. It has to show up every day. So you can't really use the excuse, well, what if it goes down? What if it's not working? Well, of course you can still do it manual if you need to. You still have the data that tells you what you need to do. But at this point, where we are with technology, we expect it to show up. We expect our uptime at 99+%. And we expect everything to perform just like we expect our humans to perform. So it's really looking at it that way.
I love that example, and I love using the Jetsons, and you've got Elroy, and you've got all of them working for you, because then I think it really brings it to life, and people see those efficiency gains. Great insights. What are some of the things you think are on the horizon for the rest of this year? What are some of the things you're kind of looking to, or what are another area that you could plug a bot in that may save you some more time and effort?
We are constantly evaluating where we could add RPA into our process. It's easier at first because you can pick those items, like I said, that are repeatable and predictable, and they're easy to monitor. As you get into the little bit more complicated scenario-driven tasks, right, where there's a lot of different exception paths, it gets a little bit more complicated. So we have used a lot of bots in general to drive those types of like simple tasks. But right now we're looking at using those bots to do things like follow-ups, corrections, changes. So for us, I would say that that's a big part of our strategy this year. But in general, we are also really trying to push the boundaries of, the standard type of workflow that we have in general. So we're trying to really drill down into how can a human do this task faster? Like, we're looking at it task by task. So right now you might have to go in and you have to verify, a person's name on a driver's license. Let's say you got to verify their name is correct in the system, because that's how we're going to pull closing docs. And if you have to navigate over here, you have to find the document, you have to stare and compare, you have to read it, you have to go back over here and type it in. That might take, 8 minutes, 11 minutes. If we could just change the space where someone goes to do that task and just show them the document, the data we extracted off the document, the data we put into Encompass, and you can just validate it and move on, we've eliminated 7 minutes out of that 9-minute process, and we're down to 2 on every driver's license. That it's huge. So we're at the point now where we're really focusing on task by task efficiencies. So if there's a bot opportunity there, we take it. If there's a technology opportunity there, we take it. And as long as we can prove the ROI and we can, show the value and it's not too hard to support, we typically will say, let's do it. It makes sense. Here's how much money we're going to save because we saved 7 minutes per touch.
I love it. What would your suggestion or recommendation be? Some lenders like yourself get it. You understand technology, you see the lifts, but there's some that are still kind of old school that are, I don't know if I trust the bot, can't do it as well as a human. Why would I do that technology? What would you recommend for people that haven't looked at bots yet? Why should they? And what are your suggestions for them?
So I feel like that is definitely, it's been our fallback in general in this industry. It's held back a lot of lenders. Some might say, well, I'm just not big enough. I don't need to do all that stuff, right? I don't need to do those things. And maybe they look at it and they still feel that way, and that's okay. But there's no reason why people should not continue to educate themselves on what's available and what the value of using those features in your existing software or what other people are already doing successfully. Just meeting with a company like Silverwork or somebody who's proven success with RPA, just watch the demos, and I'm sure they will happily refer them to customers who are successfully using those processes today. And, if they can, from a vendor perspective, the best advice to vendors is make that implementation as simple and as minimal as possible, because the more work that they put on their customers right now, the less chance of success on that implementation and adoption.
That is such a good point. And I think so many lenders struggle with that. They work so hard to get the deal done. And then they're like, here's the tool. Now you've got to do all the work.
Right. And right now, resources are tight. We're all doing more than we would like to do, right? We're all pitching in wherever we can. So whether you're just running operations and you also have to implement a bot because that's just, you don't have the technology staff to do it. As an operations leader, I would want to understand technology and how it's going to help my organization. So it's not that technical at the end of the day. It's really not. It's like, show me how it works, break it down into layman's terms, and tell me exactly how to implement it. And that's where vendors will find success, and people in our industry, if they are not intimidated and they're not overwhelmed by the implementation, I feel like they will take steps forward. And I think as an industry, we have to kind of come together to make it easier for everyone to do that, because you're not going to find people. I've been doing this for 30 years, right? And of my 30 years, I probably spent 15 of it in technology and 15 in production and operations. Of course, I get it because it's all I do. But there's not a lot of people out there who just continue to do all of those things, right? You've got a lot of new people coming in. They may be more tech savvy, less mortgage savvy. We just have to read and listen and watch the demos and learn from others and talk to people. So,
Keri, I love your perspective. You have such a wealth of knowledge. You and I could sit here and talk for hours as we go through this. You are welcome back anytime. Hopefully we can meet. If you're going to be at ICE, I'd love to meet up with.
Absolutely.
We will definitely have to meet in person at ICE, but I can't thank you enough for your time and your insights for this episode of the Fintech Hunting Podcast.
Thank you.